All right. Welcome, everyone. Really glad you're here with us today. Just give us a few more minutes as people finish joining, and we'll get started. Okay, so welcome to today's webinar, How to Save 3 to 5% Without Cutting Anything. My name is Pedro Lopez. I'm the marketing manager here at ProcureDesk, and today I'm joined by Sachin Sharma, our founder and CEO, who's going to walk you through exactly how mid-market finance and procurement teams are recovering millions in savings without cutting headcounts, services, or vendor relationships. Here are a few things before we hand it over. So the session is being recorded and the replay will go out to everyone who's registered. If you have any questions, drop them in the chat. We'll get to them in the end at the Q&A section, so don't hold back. Here's a quick note on why we're here today. So one thing I keep hearing from the finance and ops leaders who I talk to is that they've already done the hard work, which is negotiating contracts, set up approval flows, built on vendors lists, and they're still leaking a considerable amount of money year after year. And not because their strategy is wrong, but because the gap is in the execution between what was agreed and what was actually get bought. So that's what Sachin is going to break down for us today. Sachin, the stage is yours.
Thanks, Pedro. I appreciate that. And welcome, everyone. Good morning, good afternoon, good evening, depending on where you're joining from. I appreciate the time today. So let me jump into a quick agenda for what we're going to cover today. As Pedro said, this webinar is focused more on how companies can save, 3 to 5% of their total spend. So we'll talk about where it really hides, right? We'll start from that. What's our finding working with close to 500 plus companies now? We'll talk about three different levers you can leverage today, right? Whether we'll talk about controlling Maverick spend, how you can use your contracts for reducing supplier spend as well as consolidating vendors. And we'll also talk about how you can automate your AP process and kill the invoice backlog and how it's all connected to the 3 to 5%, right? And then we'll leave you with a 90-day quick win plan. We'll give you like an action plan that you can use. So stay on the call. We're going to give you some actionable steps that you can take. It's not just one of those, here are the three things you should do. We'll give you a plan on what to do. And we'll talk about a case study of one of our clients kind of actually achieved all these results, and we'll follow that with Q&A. So before we get started, why you should listen to me. Just a quick background about me. I have 2+ decades of experience working in procurement and AB space, both as a practitioner, means managing the procurement and accounts payable department, as well as a consultant or a vendor, right? So I spend my time in product management, being practitioner, but mostly in the procurement and AB space across different industries, different size of companies, and so on. Now, the reason we built ProcureDesk, it was kind of an internal frustration that I was having when I was running a procurement team, because we did not had millions of dollars of budget to spend on a procure-to-pay system to automate our procurement process, and which led to that we need to have a solution in the market. It should exist that allow growing companies to control spending without breaking the bank. Like that's kind of genesis of why we started ProcureDesk. And our overall mission is giving finance team the ability to control spending without any creating bottlenecks, but also for AP team to close books faster and grow efficiently. So with that said, I would love to connect with you on LinkedIn. In the slides, there is a link at the bottom of the left-hand side where you can click on it and connect with me. I will appreciate the conversation. We can take it forward on LinkedIn. So with that said, let's jump right in. So where is that 3 to 5% of money going, right? Or the money you could save, right? So we see three different areas on where the spending is kind of our spend leakage is happening, right? So number one is Maverick spend. So what is Maverick spend? So Maverick spend is the spend that goes through unapproved vendors or that goes outside your defined procurement process. So whether it is, or you have a standard list, let's say everybody should buy office supplies from Staples, but they don't. So they go to Amazon, they go to somewhere else, and so on, right? That is going through unapproved vendors, hence Maverick spend. Based on the research we have done, as well as a research done by Payments survey of around 27 or 2,050 businesses, around 23% of spend or annual spend is considered Maverick spend, which means there's an opportunity for you to kind of act on it and save money. So we'll talk about how to actually do that. The second area is contract leakage. So what happens with many growing companies is there's no central place to manage your vendor contracts. So what happens over a period of time is you sign a contract that has a auto renewal clause, or it might have like a automatic price increase. Very common to see 3% or 2% to adjust for cost of living adjustments. And if you're not paying attention to that, you're just automatically agreeing and the contract gets renewed and you land up paying more than what you agreed to pay when you signed the contract. The second thing is you might have different vendors for the same type of product or service that you're buying. Very common to see, you have 3 vendors for office supplies, or maybe each department is using a different vendor. Let's say you talk about project management. One person is using ClickUp, other is using Asana, the other one is using Monday.com, and so on, right? So that spend can be consolidated if we pay close attention to that. And then the third thing is invoice errors. So if you have a manual invoice processing, it does happen in many cases that you either might end up paying duplicate invoices, like the same payment goes twice because the vendor sends you the same invoice twice, maybe with a slight different variation in the number, or it gets processed by mistake. Number two is you're paying late fees. So if you have a slow AP process and you're paying the vendors late, they might be charging you late fees, right? Which is around 1 to 3% of the spend falls in that bucket. Contract leakage is around 5 to 10, right? So those are the three buckets we're going to talk about. We'll kind of go through each one of them, what is covered in each, and how you can act upon it today to save that 3 to 5%. All right, so let's dig in. So typically, this is what we see. I mean, this might sound familiar, or some of this might sound familiar to you when you think about what a finance team's month-end process looks like, right? If you do not have proper spend controls in place. Typically, you see a flood of invoices, right? So there is no PO process, or if there's a PO process, PO is purchase order upfront. Maybe vendors are people are just calling vendors for whatever they need. They get that product or service. Vendor sends you the invoice. That invoice then sits in the inbox of the person who actually ordered the product or service. And then, maybe last month, last day of the month, they just send it to AP and say, hey, I need to pay this today. So it happens a lot, right? If you do not have a process for managing spend before the invoice shows up. Second is chasing approvals. So if you are someone from AP, you probably be familiar with this, right? You have an invoice, you need to get it approved. And now you are routing it to different people for approvals. You're chasing whether approval is done or not, calling people up, and so on, right? Pretty standard practice. What that means with all this is you could have budget surprise. Because if you do not have a upfront way to, or a proactive way from a spend management standpoint, then all what you're doing is you're receiving those invoices, you're booking in your accounting system, whether you're a small company like using QuickBooks or using Sage or other systems. When you book that invoice, that is the time you realize whether you went over or under from a budget standpoint, right? So, which you also means you might be discovering duplicates later, or it's month end marathon, right? Trying to chase all the invoices, put it in the system so you can close your books, and which means it could delay your books from you might be closing at the 10th or the 15th day for that matter. What it all leads up to is your ability to answer questions around where company is spending money, whether it's your CFO asking for, hey, I need to, who are our top 10 vendors, or it's your auditors looking for, can you show me all the documents related to, the standard controls you have in place? Are we following it? And so on, compliance and so on. Those are all the areas that shows up, right? So if you don't have control over spending, you're probably panicking during audit time. So we'll walk you through how you set it up. So we'll start with Maverick spend control, right? So when you said Maverick spend control, again, it is it's this spend that is happening, which is outside your defined process, outside your list of approved vendors. Now, you might ask why it happens. In our experience, not everybody's trying to break your purchasing policy, right? They're trying to go outside the defined policy. It just so happened that if your process is very cumbersome, right? So let's say your process is go to a vendor website. Let's say you want to buy office supplies from Amazon, and your process is go to Amazon, take a screenshot from the cart, put a link in the form, then print the form, get it signed, and then hand it over to a buyer who will then actually place the order. You have so many friction touch points. So if you have such a complex process, people are not going to follow. That's kind of the number one reason Maverick spending happens. Either A, the process is too cumbersome, or two, they don't know who your preferred vendors are, right? So both needs to be taken care before we can look at why Maverick spend keeps on happening. So what is the price of Maverick spend? It's either you're paying more than what you kind of agreed to pay, right, with a standard vendor. Let's say supplies you buy for $100, you're paying a premium for that, right? Second is you have no budget visibility in terms of how much the budget is actually spent. And the fix for that is you need to set up a proactive spend control, which we'll talk about today. Now, I will use the word ProcureDesk in many of these slides. You can replace this with an internal system that you might have, a system that you want to build, maybe wipe code something, or spreadsheets, Slack messages, you name it. But the idea is have a process which can help you manage your Maverick spend. So with that, we'll get into a high level overall what spending looks like from without spend controls and with our system control, our process control, and so on, right? So on the left hand side, you see things like employees buy from any vendor at any price, or invoices arrive after budget is already exhausted. So you're always dealing with budget surprises. No visibility into committed spend. So if at any time you want to see how much is our committed spend with which vendors, so I can plan my cash flow requirements, you have no easy way to do that. Or you have duplicate purchases across departments. People are buying similar products across departments, or common thing, office supplies, right? Everybody buy office supplies. And if every department is, kind of making their own orders, it's possible that they order duplicate orders. Or if you're a warehouse, it's very common where we see duplicate purchase orders happening, right? Or you're paying premium pricing, which you talked about. I'll give you a very concrete example in a minute to drive the point home. And manual approvals, right, which gets lost or ignored. We all get a lot of emails every day. You just don't need another email asking for approvals. It gets lost. So what does it look like with ProcureDesk controls or system controls? One is your request gets routed to the right person. Your budgets are checked proactively. You have full visibility into your spending. You can plan your cash flow in advance in terms of what the next 6 months or 9 months are going to look like. You have shared catalogs of items from where people can see exactly from where we need to buy and what is agreed upon price. And the approvals are getting routed in real time versus emails. So I'll just take a quick sip. and get back to it. So I'll give you an example on what this means. So let's say you purchase something for $500, office printer maybe, and you already have a negotiated pricing with an existing vendor. Now, for whatever reason, if the purchase does not go through it, let's say you'll end up paying $620, 24% premium versus the vendor contracted price because they went and bought it from some other vendor. Now, that's one part of the price, right? But now what it means is the finance team has to figure out they went through a non-approved vendor. If the invoice shows up, now I got to set up that vendor, get all the details, make sure I get approval of the invoice before we can pay the vendor, and so on, right? So even if you take like look at this one example, your cost is not $500. Your cost is around $770. How do I got to this number? $120 premium here, right? Or 620 minus 500 is 120 plus 3 hours of additional work. On an average, the cost is 50. So 120 plus 150 is 270. So that's how we got to 770. Now, if you just look at this number, right, forget about the time wasted, and you just look at this $120 difference. If you made 200 purchases in a month, right, that adds up to 24K. So that is the kind of impact it can create for the entire system when you're going through unapproved spending. So how do you fix it? This is how you want to kind of set up the process, right? So number one is you have a standardized process for your employees to submit requests. If you have a system, it's great. If not, you can centralize the purchases in a way that it goes to one person so that they can kind of act as a control or a system, right? Second is you should have a way to check against preferred catalog pricing. So if you have negotiated a pricing, and if you haven't done that, that is the first thing you should do, right? Work with your existing vendors and negotiate the pricing. So once you have the pre-negotiated pricing, people can check against that, and then you have the pricing is enforced automatically, right? They're selecting from a checklist or a list of items rather than typing in trying to figure out the pricing, and it needs to be approved. Now, I want to talk about briefly about approvals. Where we see most people going wrong is when they try to implement a process like this, they want to make sure that every purchase is getting approved, which is great in theory, but in practice, think about it this way. If your employee needs to buy something for $100, does it really need to go for approval? Or you could just make sure that, maybe anything under $100 don't need approval. Now, my rule of thumb here is I generally look at what I have learned and how to do this is basically I look at my spend and I look at the 20% of the vendors that drive 80% of the spend. So generally the Pareto principle or 80-20 principle applies here as well, where you can look at your total spend, focus on only those and set that as the threshold. So let's say if your average purchase amount is $500 and anything above that contributes to that 80% spend, just set up a threshold that anything less than 500 does not need approval. Happy to talk more about if you need more details on that. So this is an example of how it should look like, right? So you have like a catalog of items where you have pre-negotiated the cost, you have the preferred vendors, the price, and so on. If it is a inventory item, people can see what is on hand at any given time, so they are not actually ordering the product or service again, right? As an example. So that's step number one, right? This is what to do. So we'll now talk about step number two, or level number two is contract and supplier consolidation. Typically, what we see is when companies are growing over a period of time, you have a lot of vendors. So essentially, it's just like you're buying something from one vendor today, and you just add one more over a period of time, and one more, and so on. So typically, we see 20 to 30% reduction in vendor count when companies go through this exercise. Basically, they consolidate the vendors. One of our client actually saved $400,000 by effectively looking at their contract and renegotiating a contract which was about to auto renew. So what does this process looks like, right? So step one is running a spend analysis where you can understand where you're spending money, with whom, how many vendors you have in each bucket. I'll give you exact step-by-step process to do that. Second is you want to consolidate to your vendors and have one or two preferred vendor for the product or services that you're purchasing. And then third is you want to have a contract renewal tracking. So you can track when your contract is up for renewal and set up like some sort of notification process where you get notified. That way you can act on it, right? In terms of, do you want to renew it? Do you want to renegotiate the pricing and so on? All that needs to be factored in. So, how to do spend analysis? It's pretty simple. You start with exporting your spend data out of an accounting system, or if you don't have access to it, ask your finance team and say, "Hey, I'm looking for the last 12 months of data." Now, the more data you have, the better. Like in terms of if you just purely have vendor names and amount, that is not super helpful because you need to now figure out what exactly are we buying from this vendor. But if you do have item descriptions, some sort of indicator on what was purchased, unit price, the quantity, right? Those sort of things are helpful to an effective spend analysis. So first step is let's pull all the data. Second is categorize by vendor. So what you do is, if you have some way to identify what we purchase, you put it into different buckets. A bucket could be office supplies, it could be IT hardware, it could be software, right? It could be chemicals, whatever you're buying. And the idea then is you can also look at which department is buying, right? So if you look at a category, let's say IT supplies, and you realize you have four vendors and each department has its own vendor, right? That's a golden opportunity for you to kind of go look for what we call duplicate vendors, right? And just consolidate that. You might also see that you have the same information present with different names. So you want to kind of normalize all that, right? So, Amazon, Amazon Business, Amazon Inc., they're all same Amazon, right? Sometimes called Amazon Capital as well, right? So consolidate the vendors so that you have a normalized name and make sure you're understanding the mapping of the departments. This is a crucial step because if you're going to consolidate the vendors and you're going to ask different departments for the other information on, hey, can we consolidate or not? You want to know all that. What you want to do on top of it is prioritize the top 10 vendors. So now you have a list of your top 10 vendors by spend, which you want to focus on to reduce the total cost and negotiate a better price by now either doing a quick bid and buy, right? You just reach out to them and say, hey, we buy so much from you. Here's a quantity we have purchased in the past. If we commit to this volume with you, what is the price you're willing to provide, right? So you kind of reach out to 2 or 3, pick the preferred vendor, and so on. So that's step one, right? Step two is you want to make sure that the costing is documented in a contract, and that way you can go back and look at that, right? So for example, all right, vendor A has office supplies, we spend this much, it auto renews at 3% unless we cancel by Friday, like some sort of renewal process, right? Or something renews in 44 days and it has, we might want to renegotiate, or it's a 91 days because it's a longer, period for us to figure out what the alternate vendors are. Essentially what you want to do is, if you don't take anything else, just take this, you want to set up renewal alerts. Now, a system like where you maintain your contracts can do that easily for you. If nothing else, go to your calendar and put a reminder for yourself, right? That's the most easiest way to do that. So that way you know when this is up for renewal and you need to kind of go back and look at it, right? So that way you can just track all the contracts and renegotiate in advance. So you can just keep on reducing your spend over a period of time, right? So that is level number 2. This is how it looks like in practice, right? So if you have a centralized contract repository, you will be able to see all your existing contracts. You can quickly find contracts, what is up for renewal, and design your, I would say, sourcing or procurement process based on that. All right. So that's number 2. Number 3, let's talk about that, which is automate your AP and kill the invoice backlog. So a recent survey with payments.com, we saw like 280K is the annual average cost of invoice fraud. So that's the fraud happening in the system. That shows up in a couple of ways. Number one is you probably, the data is entered wrong and you just paid out like, wrong amount, right? You're losing early payment discounts. So you can pay the vendor faster. Most of the vendors will give you the ability to, like, a discount of 2%, for example, and say, hey, my standard terms is net 60, but if you pay me within 10 days, you can take 2% discount. Most of the companies don't have processes that are efficient to make sure that invoice is approved within 10 days so you can pay, right? Or you lose money through duplicates. So you're paying same vendor twice, happens that way. So what a specific process looks like in this, right? So basically, it looks like this way. You have an invoice shows up, you put in a system or use some sort of AI to pull the data so your team is not spending time in entering data. One, it increases accuracy. Two is increase efficiency, right? Your team doesn't have to manually do data entry. Then this is the most important step. If you're buying materials, you must do this. If you're buying services, it's called two-way match. But you should match a invoice with a purchase order and receipt, and make sure that you're only paying for if the price agrees with what's on the purchase order and the quantity agrees with what's on the receipt, right? So did you receive it and the pricing? And if there are any exceptions, they are flagged and reviewed by the right person. Then the payment is queued, which means now it is ready for payment and your books are updated with that, right? That's kind of a high level process on what it looks like. So if you implement all these three, this is what it looks like, right? Before and after. Before you have month-end surprises, after you have real-time visibility, no surprises. 5 to 10 days to close the books, right? Books closes in 3 to 4 days. No idea which vendors you're actually using versus full vendor list, consolidated and negotiated pricing locked in. And A/B team buried in manual matching versus three-way match runs automatically. And this is my favorite. Audit season is into panic season. Here, audit is always ready. No scramble, no stress, right? So I've said in the beginning, I'm going to give you a 90 days plan, right? So this is what I recommend. You can implement one part of it, you can implement all three of it, but high level, this is what we recommend. So number one is in the first 30 days, run a spend analysis. That's kind of step one, understanding where are you spending money today, right? Then we'll identify the top 20 vendors to figure out what's the total spend with each one of them. And then we map the purchase to which has already, do we have a purchase order process? Do we need to set something up? Or do we have approvals? It's kind of an audit of the current process, right? And we can help you with that. I'll later talk about it. And list all your active contracts. So at the end of 30th day, you have complete visibility in terms of where the spending is going, right? And then 31 to 60 days is where you start implementing the process, right? In terms of, hey, implement an approval workflow if we need to. We are going to go negotiate pricing and lock in pricing for different buckets. We are going to set up budget tracking so we can figure out how much of the budget is actually spent at any given time. And we're going to set up a renewal process or renewal tracking process so we can track all the contracts that are up for renewal. That is the 31 to 60 days. And the 61 to 90 days is where renegotiate the top vendors, you automate the invoice matching process, and you track the savings versus the baseline. So if you are somebody responsible for negotiating costs, you want your CFO or controller to know how much value you're adding, right? So that's where you set up a baseline and you compare the pricing against that. And then, of course, from an audit standpoint, you package all that and make it available to everyone, right? So those are the kind of the three steps or the 30, 60, 90 days plan that you can look at to implement. So here is at a high level how the math works, right? If you're a small company, and these are averages again, this is for example purpose, right? So if you're spending $10 million with external vendors, you can save 300K to 500K, 3 to 5%. Mid-market, 40 million, 1.2 to 2 million. If you're spending 100 million, you can save 3 to 5. So these numbers add up, right? These are not small numbers we're talking about. In our experience, what we have done working with other companies is around 40% of your total revenue is the external vendor spend. So if your revenue is 10 million, you're probably spending 4 million with external vendors, which you can work on to reduce this cost, right? So in the interest of time, I know we're running out of time, so I'm going to skip the case study. But here's a few things I wanted to talk about. So if you want to kind of work with us to figure out an action plan, we're offering this free of cost to people who are joining this webinar, where you can hop on a call with us. We'll do an audit and kind of figure out where's the best opportunity for you to kind of either work on the process or work with us and so on, and also kind of give you things you can implement on your own, right? So here are a couple of links here. There we put together an ROI calculator for you. You can go to this website, roi.calculator. You can review overall where you're spending. You just put your quantity, like how many transactions are you processing and things like that. It'll give you an idea about where are the opportunities for cost savings. You can book a free strategy sessions with us, or if you want to see what ProcureDesk does and how it works, you can schedule the meeting by clicking on the link below. So here is the link, procuredesk.com, just for a demo. And with that, Pedro, I'll hand back to you and see if there are
Sure.
any.
So that was a really strong session. Okay, everyone. So we got some great questions coming in. So let's get into two of them. So Sachin John asks, most of our purchases happen through company cards because it's faster. How do you actually get people to follow the PO process without slowing everyone down?
Yep. So, great question. I mean, we see it all the time, right? You have credit cards, and that's the easiest thing to do. So everybody follows that. If you are using mostly credit cards today, you have to do two things, right? One is you have to design a process that is easy to follow. So, for example, we worked with a charter school recently. They had a lot of everything was on credit card, right? So what we did was you set up like an Amazon punch out process where you can just simply click on a link, it opens a punch out. But what we did behind the scene was we're still using the card to pay the money, but upfront put a requisition process, right? The second thing would be, I think, understanding maybe top vendors where you can implement a PO process and move them to an invoicing rather than a credit card. So if you look at your top 10 vendors and see which one you can move to an invoice process and negotiate terms, they will require a PO process. So that's kind of how I would structure it. If one or two vendors where you can provide better experience through punch outs, do that, or to move some of your vendors to an invoicing process.
Great. So Patricia says we have preferred vendors agreements in place, but buyers still go outside them. What's the most effective way to enforce compliance without creating friction?
Yep. That's again a very great question. Like a lot of times, we see people spending a lot of time negotiating great pricing, but they're not able to implement that, right? So you have savings leakage in sense that you negotiated a great contract, but nobody follows it. And most of the time, the reason is it just either A, they don't know about it because there's not a single place for them to track. Two is just difficult to use, right? So if you can implement some sort of catalog process where you can provide them visibility and say, here's the list of approved items where we have negotiated the cost, and then route the buyers to that, I think that's the most simplest way to do. Again, that a procurement system will do that automatically. But if you do not have that, then I would just create a spreadsheet or something like that and make sure they are, it's made available to them.
Awesome. Thank you, Sachin. Okay, so just a quick note, if you want to see ProcureDesk, how ProcureDesk can help you to put this into practice, our team is happy to walk you through it. So scan the QR code that you see on screen and get a personalized demo. So we're going to wrap here, but thank you for everyone who joined us live, especially for those who sent in questions. It was a really great conversation. Sachin, any final thoughts before we close out?
No, I hope there's one or two things you can take it from this webinar and implement it. We design it to be more practical than theory. So let us know if you have any feedback, and again, connect with me on LinkedIn.
Awesome, perfect. So for everyone watching live, you will receive the recording and the presentation deck in your inbox within 24 hours. And I hope today gave you a clear, very practical path to recovering that 3 to 5% without cutting anything you don't have to. So thanks, everyone. Have a great rest of your day. Bye.
Thanks all. Thanks for joining.